Subscribe to my channel Report Stock.
Welcome back to the deep dive. Today we're jumping into the world of company financial stock performance, really trying to see past the headlines.
Exactly. It's about finding those, hidden insights, understanding what's really driving things.
And our focus for this deep dive is Broadcom Inc. That's ticker AVGO. We've got their Q3 earnings report, the one ending July 2025, and some future outlook analysis too.
Right. So the mission here for you listening is really to get a framework. How do you look past just the numbers? What drives investor feeling? How do analysts see the future? And crucially, what about the bigger market picture?
Think of it as a bit of a shortcut, to getting savvy about reading these reports.
Precisely. It's about building that multi-layered view.
Okay, so let's get straight into it then. Broadcom's Q3, they just reported, and, well, the numbers look pretty strong.
Very solid performance.
They posted quarterly earnings of $1.69 per share. Now, the Zacks consensus estimate, that's the average analyst prediction, basically was $1.66. So they beat that. It's an earnings surprise of plus 1.81%. Not huge, but, a beat is a beat.
Right, and any beat signals, potentially better execution or demand than expected.
And put that $1.69 with last year, they earned $1.24 per share back then.
So that's a really significant jump year over year. Real bottom line growth there.
Definitely shows momentum.
And it's not just a one-off, is it? That's the key thing. Broadcom has actually beaten these consensus EPS estimates 4 times in the last 4 quarters.
4 for 4.
Yeah. And that kind of consistency, it signals reliability, right? Predictable earnings. Investors love that. It suggests management really has a handle on the business.
That makes sense. Builds trust. Okay, so that's earnings. What about the top line, the revenue?
Also strong.
They reported revenues of $15.95 billion for the quarter. And again, that beat the Zacks consensus estimate by 0.78%. And compared to last year, that's up from $13.07 billion. So healthy growth there, too.
And just like with earnings, there's a pattern. They've topped the revenue estimates 3 times in the last 4 quarters.
Okay, so pretty consistent across the board then. Both profits and sales looking good and generally better than expected.
Exactly. Solid upward trend, beating expectations. That's a powerful story.
So how has the market reacted? What's the stock done?
Well, that's where it gets really interesting. The stock performance has been quite strong.
Broadcom shares, AVGO, they've added about 30.4% just since the start of this year.
Which is huge when you think about the broader market.
Right. Compare that to the S&P 500. It gained, about 9.6% in the same time frame.
So yeah, Broadcom is significantly outpacing the market. Shareholders have done very well there.
Okay, so great quarter, consistent beats, stocks flying high. What's the catch? Or maybe, what's next?
That's always the million-dollar question for investors, isn't it? What's next? Because, look, past performance is great, but the stock price now reflects future expectations. So whether that price momentum continues, it really depends heavily on what management says on their earnings call, their guidance, and the overall earnings outlook going forward. Stocks trade on the future, not the past.
That's such a crucial point. It's easy to get swept up in a good report. So how do we gauge that future potential?
Well, there's actually a lot of research showing a pretty strong link between how a stock moves in the near term and trends in earnings estimate revisions.
Yeah, revisions. You mean analysts changing their future profit forecasts?
Exactly. When analysts start bumping up their estimates for next quarter or next year, the stock often tends to follow suit, and vice versa, of course.
Why is that? Is it just that they have better info?
Often, yes. They might be reacting to management's private guidance, industry checks, supply chain news, things the market hasn't fully digested yet. These revisions can be early signals of a shift.
Okay, so tracking those revisions is important. Sounds complicated, though.
It can be, which is why tools like the Zacks rank exist. It's basically a rating system, #1StrongBuy down to #5StrongSell, that specifically harnesses the power of these earnings estimate revisions. It's got a pretty solid track record for predicting short-term performance.
Got it. So given Broadcom's amazing Q3, they must have a #1 rank, right? Strong buy.
Well, here's where the nuance comes in. Despite that fantastic quarter we just talked about, the trend in estimate revisions for Broadcom before this report came out was actually, well, mixed.
Even with those results.
Yeah. The revisions weren't consistently positive leading up to the report. And because the Zacks rank is driven by those revisions, it translates into a Zacks rank #3 for Broadcom right now. That's a hold.
A hold. So what does that actually mean in terms of performance expectation?
It means, according to the Zacks model, the stock is expected to perform pretty much in line with the overall market in the near term. Not necessarily bad, but maybe not the continued significant outperformance we've just seen.
Wow, okay. So great results, but the forward-looking indicator is flashing yellow or maybe just neutral?
Sort of a neutral signal, yeah. Past performance is history. The revisions suggest a more moderate path ahead, at least for now.
Do we have the actual consensus numbers they're looking at?
We do. For the coming quarter, analysts expect, on average, earnings of $1.81 per share. That's on revenues of about $16.96 billion.
Okay, still showing growth from the quarter they just reported.
Yes. And for the current full fiscal year, the consensus is for $6.64 in EPS on $62.72 billion in revenue. So growth is still baked in.
Right.
But it's the change or lack of strong positive change in those estimates recently that leads to that hold rank. It's a complex picture.
It really is. It's not just about the company itself then.
Not at all. And that brings us to the next layer. You have to look at the wider context.
Yeah.
Even a star company can face headwinds if its whole industry is struggling.
Get industry context.
Broadcom is in the Zacks electronics semiconductors industry, obviously a hugely important sector.
The backbone of everything tech, basically.
Pretty much.
Yeah.
But even within vital sectors, conditions can vary.
So how is the semiconductor industry doing right now, according to this Zacks ranking system?
Okay, now hold on to your hat here. This industry, electronic semiconductors, it's currently ranked in the bottom 19% of all the 250-plus industries that Zacks tracks.
Bottom 19%. Wow. That sounds not great.
It's definitely a flag. It suggests that, as a group, semiconductor companies might be facing some challenges. Or maybe investor sentiment is just cooler towards the sector right now compared to others.
But why does that industry rank matter so much if Broadcom itself is doing well?
Because the data is pretty compelling. Research consistently shows that industries in the top 50% of the Zacks rank outperform those in the bottom 50% by a significant margin. More than 2 to 1, typically.
2 to 1, that's huge.
It is. It's a powerful tailwind if you're in a top industry,
Yeah.
and potentially a strong headwind if you're in a bottom one. It can really influence investor appetite and valuations for all the companies in that group.
So Broadcom might be swimming against the current a bit here, despite its own strength.
That's a good way to put it. It makes their strong performance even more impressive, perhaps. But it also adds a layer of risk, or at least tempers expectations. Can they keep outperforming if the whole sector is lagging? It's tougher.
Like running uphill, as you said.
Okay.
To maybe illustrate the variety within tech, let's quickly touch on another company, Quantum Corp QMCO.
Right, Quantum. They're in the broader tech space, but different computer storage devices.
And they haven't reported their latest quarter yet, the one ending June 2025.
Correct. We're waiting on those numbers. But we do have expectations.
What are they looking for?
Analysts expect them to post a quarterly loss of 15 cents per share.
A loss, okay.
But context is key here. That expected loss is actually a huge improvement from last year. It's a year-over-year change of plus 91.7%. So they're expected to be losing much less money.
So it's more of a turnaround story, maybe?
Potentially, yes. And interestingly, that net $1.15 estimate hasn't changed in the last 30 days. Suggests analysts are fairly stable in their view of this recovery path for now.
And revenue for Quantum.
Expected around $73.7 million, which would be up slightly, but 3.3% from the same quarter last year.
So it really highlights the difference, doesn't it? Broadcom's consistent growth beats versus Quantum's journey hopefully back towards profitability.
Exactly. Different companies, different stages, different investment stories, even within tech, requires totally different analysis.
Okay, so wrapping up our deep dive on Broadcom, we saw stellar Q3 results, really strong earnings, and revenue beats.
And that great stock performance year to date, crushing the S&P.
But then looking forward, the picture gets a bit more complicated. The Zacks rank is only #3 hold because the estimate revisions before the report were mixed.
Right, suggesting maybe more inline performance ahead near term.
And then there's that big elephant in the room. The industry itself is ranked near the bottom.
That bottom 19% ranking,
Yeah.
which research shows can be a real drag.
So understanding all these pieces, the company's own health, the forward estimates, the industry wins, it's crucial, isn't it?
Absolutely essential. You need that complete picture. It's never just one thing. It's how they all interact.
So boiling it down, what does this all mean for you, the listener, when you're looking at a stock?
Well, it leaves you with a really interesting question to ponder, I think. When you evaluate a company, how much weight do you give its own fantastic performance, its growth, versus the maybe challenging environment industry is in.
Right. Can a great company truly shine if its whole sector is out of favor?
Exactly. How do you balance that micro strength against the macro headwinds? It's something to think about as you do your own deep dives.
Subscribe to my channel Report Stock.